The shape-up begins at 0600. 200 men crowd the chain-link fence at Port Newark. Cold rain slaps the pavement. A foreman with a clipboard walks the line. He points. Some step forward. Most walk away with nothing. If you love stories about power built on desperation, about financial traps that turned working men into prisoners, about the mob turning American ports into their own private banks, make sure to follow, because this one ends with an empire that took decades to build and left scars that never fully healed. New York Harbor, winter 1963. The sky hangs low and grey over Red Hook. Diesel fumes mix with salt air. Cargo ships from Hamburg and Rotterdam sit heavy in the water. Longshoremen gather at the hiring hall before dawn. They need work. Work means choosing who gets it. Choosing means control. And control on these docks belongs to men who answer to other men who wear better suits and eat in restaurants with white tablecloths in Little Italy. The game starts small. A docker named Tommy owes $60. He borrowed it 3 weeks ago because his wife needed surgery, and the union health plan moved slower than her pain. A man in a leather jacket found him outside the hiring hall. Said he could help. No paperwork, no questions. Just 60 now and 72 in 2 weeks. Tommy took it. The surgery happened. 2 weeks later, Tommy does not have $72. He has 40. The man in the leather jacket nods. Says that is fine. Pay the 12 in interest. The 60 stays on the books. Next week, another 12. The week after, another 12. Tommy will pay $12 every single week until he can scrape together the original 60. At 12 a week, that is a 1,040% annual interest rate. They do not call it that on the docks. They call it the VIG. They call it juice. They call it the price of doing business. By 1965, the system is everywhere. Every major port from Boston to Baltimore runs the same operation. The International Longshoremen's Association locals are not just labor unions. They are collection agencies for organized crime. In Brooklyn, the Gambino family controls the piers through men like Anthony Anastasio, who runs Local 788 like a private kingdom. In Manhattan, the Genovese family owns the West Side docks. In New Jersey, Genovese soldiers like George Barone make fortunes from the Port of Newark and Port Elizabeth. These men do not work the docks. They own the docks. And the way they own them is by owning the men who work them. The beauty of the loan sharking operation is that it feeds itself. A longshoreman cannot get steady work without paying tribute to the hiring boss. The hiring boss is usually a union officer. The union officer is usually connected to a made man. The docker pays the tribute by taking a loan. Once he takes the loan, he cannot stop working, because if he stops working, he cannot pay the interest. If he cannot pay the interest, men come to his house. Not with guns, usually. Not at first. They come with questions. Where does your daughter go to school? What time does your wife leave for the grocery store? The threat is never spoken directly. It does not need to be. The docks operate on a system called the shape-up. It is exactly what it sounds like. Men show up before dawn and stand in a semicircle or line. A hiring foreman walks among them and picks who works that day. The shape-up is supposed to be random. It is never random. If you are connected, you work. If you kick back part of your pay, you work. If you owe money to the right people, you definitely work, because they need you earning so you can keep paying. The system guarantees that loan sharks always have customers, and customers always have debt. Anthony Scotto understands this better than most. Born in Brooklyn in 1934, he marries into the Anastasio family. His father-in-law is Albert Anastasia, the man they call the Mad Hatter, the Lord High Executioner of Murder Incorporated. When Anastasia is gunned down in a barber chair at the Park Sheraton Hotel in 1957, Scotto steps into the vacuum. By 1963, he is running ILA Local 1258 and controls the Brooklyn waterfront. He is different from the old-timers. He wears tailored suits. He speaks in complete sentences. He sits on boards of directors. He has dinner with New York governors and mayors. He gives speeches about labor reform. Behind that polished exterior, the system runs exactly as it always has. Loan sharks work the piers daily. Foremen take cash in envelopes. Cargo goes missing and nobody investigates because the investigators are on the payroll too. Scotto is not alone. Across the harbor in New Jersey, George Barone becomes the face of Genovese control. Barone starts as a longshoreman in the 1940s, scrubbing cargo holds and loading freight. He is smart. He is ruthless. He understands that the real money is not in moving boxes but in moving money. By the 1960s, he is a capo in the Genovese family. His base is the New Jersey docks. His method is simple. He identifies every weak point in the system and turns it into a revenue stream. Longshoremen need loans. Barone provides them. Stevedore companies need labor peace. Barone sells it. Shipping companies want their cargo to move without problems. Barone guarantees it for a price. The price is always cash. The cash always flows up. The loan sharking network is not just about interest. It is about leverage. Once a man is in debt, he can be used. He can be told to look the other way when a container goes missing. He can be told to vote a certain way in a union election. He can be told to lie to investigators. The debt is a chain. The longer it runs, the heavier it gets. By the early 1970s, federal investigators estimate that millions of dollars flow through these informal lending networks every year. The money is untaxed. It is unregulated. It exists in a shadow economy that operates in plain sight on the docks. Michael Clemente is another key player. A Genovese associate, Clemente works the waterfront for decades. He is old school. He does not pretend to be anything other than what he is. By the mid-1970s, he is 70 years old and still collecting debts on the piers. When prosecutors finally indict him in 1979 as part of a racketeering probe, the charges detail a career spent extracting money from longshoremen through loans, kickbacks, and threats. Clemente represents the muscle behind the operation. Scotto is the diplomat. Barone is the strategist. Clemente is the enforcer. Together, these men and dozens like them create a machine that grinds through workers' lives and spits out profit. The system works because it is insulated. The Waterfront Commission of New York Harbor is created in 1953 specifically to root out mob influence on the docks. The commission has subpoena power. It has investigators. It has the authority to remove corrupt union officials and deny dock access to criminals. For decades, it accomplishes very little. The mob adapts. It moves into legitimate businesses. It hides behind layers of shell companies and straw owners. It buys silence with jobs and loans. The commission removes a few minor players. The major players stay in place. The turning point comes in the late 1970s with Operation UNIRAC, a massive FBI investigation into union racketeering. The operation begins in the mid-1970s, and by 1980, it has produced more than 70 indictments across multiple industries. The waterfront is a primary target. UNIRAC investigators use wiretaps, surveillance, and confidential informants to map the flow of money and power. They discover what everyone already knows but cannot prove in court, that the ILA is a criminal enterprise, that union elections are rigged, that loan sharks operate openly on the docks, that cargo theft is organized and profitable, that men who resist end up hurt or dead. The evidence is overwhelming. In 1979, federal prosecutors indict Anthony Scotto on charges of racketeering, mail fraud, and tax evasion. The indictment alleges that Scotto received more than $200,000 in cash payoffs from waterfront businessmen over several years. Scotto denies everything. He says the payments are legitimate campaign contributions. He says he is a reformer trying to clean up the docks. He brings character witnesses. Governors testify on his behalf. So do mayors and congressmen. It does not matter. In November 1979, a jury convicts him on 33 counts. The judge sentences him to 5 years in federal prison. It is a major victory for prosecutors. It is also just the beginning. George Barone becomes the next target. Barone is harder to catch. He is careful. He does not take checks. He does not leave paper trails. But UNIRAC investigators are patient. They build a case slowly, one witness at a time. By the early 2000s, Barone is indicted on extortion and racketeering charges. The indictment describes decades of criminal control over the New Jersey docks. Barone eventually pleads guilty. He cooperates. He gives investigators names and details. His testimony helps dismantle networks that have operated since the 1950s. When he dies in December 2010 at age 86, his obituary describes him as a longshoreman. It does not mention the bodies or the millions in dirty money. But the network does not die with Barone or Scotto. It evolves. By the 1990s, the mob is weaker. RICO prosecutions have shattered the old power structures, but the waterfront remains a target. A 2021 internal report from the Waterfront Commission, kept hidden for years, reveals that organized crime influence persists. The report states clearly that loan sharks and bookmakers, with the approval of organized crime, continue to prey on the workforce. Cargo theft remains a problem. Hiring abuses continue. The Commission documents cases of longshoremen with direct ties to mob figures still working the docks. The names change, the families reorganize, the system adapts, but it does not disappear. One of the most revealing cases comes in 2004. Harold Daggett, a rising star in the ILA, is indicted on federal racketeering charges. Prosecutors allege that Daggett is an associate of the Genovese crime family. They say he helped steer union contracts to mob-connected companies. They say he took payoffs. They say he lied to investigators. Daggett fights back. He testifies in his own defense. He says he is a target, not a criminal. He portrays himself as a reformer fighting mob influence. In November 2005, a jury acquits him on all charges. It is a stunning loss for prosecutors. Daggett walks free. He continues rising in the ILA. By 2011, he is the union's president, a position he still holds in 2024. His case illustrates the difficulty of prosecuting waterfront corruption. The mob has learned to hide. Witnesses disappear. Evidence evaporates. Juries are skeptical. The loan sharking operation thrives for so long because it is embedded in the culture of the docks. It is not an outside force. It is part of the system. A longshoreman needs a loan. He knows where to go. He does not go to a bank. Banks do not lend to casual laborers with irregular income. He goes to the guy everyone knows, the guy who stands near the hiring hall, the guy who always has cash. The transaction takes 30 seconds. No paperwork, no credit check, just cash in hand and an understanding. The VIG is due every Friday. Do not be late. The human cost is staggering. Families are destroyed. Men work themselves into early graves trying to pay off debts that never shrink. Some turn to theft. Some turn to alcohol. Some just disappear. The docks are not a place where people ask too many questions. Men come and go. Ships arrive and depart. The cargo keeps moving. The money keeps flowing. Law enforcement makes progress, but it is slow. RICO prosecutions in the 1980s and 1990s removed some major players. In 2005, the Justice Department files a massive civil racketeering case against the ILA itself, seeking to place the union under federal oversight. The case drags on for years. In 2007, a judge approves a settlement that imposes reforms and creates monitoring mechanisms. The union agrees to clean up its act, but the agreement has limited teeth. Enforcement is difficult. The mob's grip loosens, but it does not break. By 2010, the landscape has changed. The old bosses are dead or in prison. The 5 families are shadows of what they once were. But the waterfront remains a contested space. The Waterfront Commission continues documenting mob influence. Reports from 2016 and 2018 detail ongoing problems. Loan sharks still operate. Cargo theft still happens. Union elections are still questionable. The difference is scale. What was once a multi-million-dollar empire is now a fragmented network of smaller operations. But the DNA is the same. The method is the same. The victims are the same. The Waterfront Commission itself becomes a casualty. In 2023, The Supreme Court rules that New Jersey can withdraw from the bi-state compact that created the commission. New Jersey wants local control. New York wants to keep the commission alive. The legal battle exposes the limits of reform. For 70 years, the commission has tried to police the docks. It has had successes. It has removed corrupt officials. It has denied access to known criminals. But it has never fully broken the mob's hold. Now, with the commission's future uncertain, the question is what happens next. Without a dedicated watchdog, will the old patterns return? The answer is not clear. The longshoremen themselves are often forgotten in this story. They are not mobsters, they are workers. Most of them are honest. They want to earn a paycheck and go home. But they are trapped in a system designed to exploit them. The shape-up keeps them desperate. The loans keep them in debt. The union, which is supposed to protect them, is often controlled by the same people who are bleeding them dry. It is a perfect trap. The harder they work, the deeper they sink. Cargo theft is another piece of the network. Once a longshoreman is in debt, he becomes useful in other ways. A container goes missing. An investigator asks questions. The docker says he saw nothing, because if he talks, the debt gets called in. Or worse, the mob does not always need to threaten directly. The threat is implied in every conversation, in every envelope of cash, in every late-night visit. The message is clear. Keep your mouth shut and keep working. Step out of line and everything falls apart. The theft rackets are huge. A single shipping container can hold goods worth hundreds of thousands of dollars. Electronics, clothing, pharmaceuticals, alcohol, cigarettes. The mob knows what is in every container before it leaves the ship. Corrupt union officials provide the manifests. Longshoremen move the containers to the wrong trucks. The trucks drive to warehouses in New Jersey or Brooklyn. The goods are fenced within days. The shipping companies file insurance claims. The cycle repeats. By some estimates, cargo theft at the port of New York and New Jersey costs tens of millions of dollars annually during the peak years of mob control. That number drops after the RICO prosecutions, but it never goes to zero. The distribution routes are the final piece of leverage. Once the mob controls the docks, it controls what moves through them. Not just stolen cargo. Everything. Legitimate businesses that need goods transported quickly and reliably have to deal with the mob. If the mob says a shipment is delayed, it is delayed. If the mob says a truck breaks down, it breaks down. The mob creates the problem and then sells the solution. This is not just theft, it is extortion on a massive scale. Businesses pay protection money disguised as labor consulting fees or logistics services. The money flows into mob-controlled companies. The companies pay the soldiers and capos. The capos pay up to the bosses. Everyone gets a taste. The longshoremen at the bottom get just enough to keep them working and not enough to escape. Vincent Gigante, the Genovese boss known as the Chin, understands this system perfectly. Through the 1970s and 1980s, Gigante runs one of the most powerful crime families in America. He controls the docks, the construction trades, the garbage industry. He builds a vast network of bookmaking and loan sharking operations. His method is to embed his people in the infrastructure, union officials, hiring agents, shop stewards. These are not flashy gangsters. They are bureaucrats with mob ties. They sit in union offices and make decisions about who works and who does not. They approve contracts. They settle disputes. They collect dues. And they skim from everything. Gigante's influence on the waterfront is so deep that investigators spend years trying to map it. He uses cutouts and intermediaries. He never touches money directly. He never signs anything. When he is finally indicted in the 1990s, the charges include labor racketeering, extortion, and conspiracy. But proving his personal involvement in specific dock crimes is nearly impossible. Gigante is brilliant at insulation. By the time prosecutors put him away for life in 1997, his waterfront operation has already passed to others. The network survives because it is designed to survive. No single arrest can kill it. The loan sharking network on the docks is ultimately a case study in systemic corruption. It is not just a few bad actors. It is an entire ecosystem built on exploitation. The shape-up creates desperation. The union provides access. The mob provides capital. The capital comes with chains. The chains turn men into assets. The assets generate profit. The profit sustains the system. It is elegant in its brutality. What finally weakens the network is not law enforcement alone. It is economic change. Containerization transforms the shipping industry in the 1970s and 1980s. Containers mean fewer longshoremen are needed. Jobs that once required dozens of men now require a handful operating cranes. The shape-up gradually disappears. Hiring becomes more formalized. Automation reduces the human element. With fewer workers, there are fewer targets for loan sharks. The mob's grip loosens not because it is defeated, but because the industry changes beneath it. But even as the old system fades, traces remain. In 2024, Harold Daggett, the ILA president acquitted of mob charges in 2005, leads a major port strike. His salary is over $900,000 a year. His critics point to old allegations. His supporters call him a champion of workers' rights. The truth is probably somewhere in between. The waterfront has always been a place where lines blur, where power and money move in shadows, where the past never quite dies. The final image is this: Port Newark on a cold morning in 2023. Cranes swing containers from ship to truck. A handful of workers in hard hats direct the machines. There is no shape-up. There is no crowd at the fence. The system is efficient now, clean, professional, but if you look closely, you can still see the outlines of the old world. The union hall where deals were made, the parking lot where cash changed hands, the warehouses where stolen goods were fenced. The ghosts are there. And in a few corners, in a few locals, in a few quiet conversations, the old methods still flicker. Loan sharking is smaller now. Cargo theft is harder. But the instinct remains. The understanding that the waterfront is not just about moving goods. It is about moving power. And power on the docks has always been for sale. The Longshore loan shark network lasted for more than 4 decades. It generated hundreds of millions of dollars. It destroyed families. It corrupted unions. It turned a vital American industry into a criminal enterprise. And in the end, it survived not because it was invincible, but because it was adaptable. When the law came, it bent. When the economy changed, it shifted. When the old bosses died, new ones stepped up. The lesson is not that crime pays. The lesson is that crime evolves. And the waterfront, for all its progress, still remembers the men who built empires on the backs of desperate workers, waiting at the fence every morning before dawn, hoping for a day's pay and a chance to stay one step ahead of the debt.